Dear students, welcome to Shasha's virtual classroom. So let us continue with the. This is Frank Wood's book. So write up the asset and liability and capital accounts to record the following transactions in the books of F. Murray. F. Murray is the businessman. So started business with 15,000 in the bank. So what we can do is first we can make a list of assets and liability account. So let us make assets and liability account. Started business with 15,000 in bank. So what are the accounts that are involved? Bank account is involved and capital account is involved. So next, so the next one, bought office furniture by check. So office furniture by check means furniture is involved. So bank account is already there because check it is given by check. Bank account is already there. So bought machinery. So machinery account is involved. On credit from Trees Limited. So Trees Limited is a liability. So Trees Limited. Bought a van by paying 6,010. Van. Van account by paying check. Bank account is involved. So already bank account is existing. Sold some of the office furniture. Office furniture is there. Yes, office furniture is there. Not suitable for the business on credit to D Twig and Sons. So we are selling it to D Twig. So D Twig. Furniture account is already there, but Twig account and Sons was not there. So we are writing that. Paid the amount to owing to Trees Limited by check. So Trees is already there, bank account is already there, and received the amount due from D Twig and Sons 150 in cash. So cash is not there. So cash account is not there. So cash account is an asset. So cash account is right here. So D Twig also is an asset only. Okay. So these are all assets. So liabilities are only to capital and Trees Limited. So then received the amount from the bought more machinery by check 650. Machinery account is already there. So that's why we don't have to do that. So now we need to open bank account, furniture account, machinery account, van account, cash account, capital account, trees limited account, and D Twig and Sons account. So how do we do that? So what you can do is you can try answering this question on your own. So we will discuss this now itself. We will work out together. We'll okay. So first let us make a list of all the assets and all the liabilities account so that the work becomes easier. So okay. So first bank account. So started business with 15,000 in the bank. So what has happened? Asset has increased. Which asset has increased? Bank. Bank is an asset, right? So bank balance is an asset. So bank balance is increased. So it is an asset. So we have to debit the asset. 15,000. 15,000. So bank account is debited with 15,000 because asset has increased. So bank has increased. But against this, we have to write how it has increased. How it has increased because capital has come in. Capital. So this 15,000 is nothing but capital. So now capital is a liability and liabilities will always show credit balance. So liability. So 15,000. So liability capital account will be credited 15,000. See, liability capital account is credited 15,000. So how is this affected? So how this has happened? Because of the bank, money has come in bank. So this is how you have to write. So bank capital account credit means capital account credit, opposite side bank. So here bank account debit means bank account debit, opposite side capital. So this is how you have to analyze and write the answers. This is how you have to prepare the ledger and you have to write. So the next one. What is the next transaction? Bought office furniture by check 1200. So office furniture is increasing. So office furniture is an asset. So office furniture is increasing. Office furniture is increasing. So how much? 1200. So by check again through bank. So it is also asset. So bank furniture is also asset. So bank is also asset, but bank is decreasing. So when bank decreases, when an asset decreases, it should be credited. So bank account should be credited. So here we write furniture 1200. See, bank account is credited, furniture account is debited. Furniture account is debited, bank account is credited 1200. So this is how we have to write 1200. Okay. So we have to write on the both the sides. Then bought machinery 1400 on credit from Trees Limited. So what is happening? Machine is an asset. Machine is increasing. When you buy machinery, machinery will increase. So machinery is an asset, so it will have a good balance. On credit from Trees Limited. Who is giving? Credit the giver. Who is giver? Trees Limited is the giver of machine to the business. Okay, so Credit Limited is the Trees Limited is the giver of machine to the business. So how much? 1400. So machinery 1400. 1400. It's increasing. See 1400. Machinery is debited with 1400. See machinery is debited with 1400. And who has given it? Trees Limited has given it. So Trees Limited is a liability. So what has happened? Asset has increased, liability is also increased. So asset has increased. So machinery account is an asset, so it has increased by 1400. So even liability means Trees Limited we have taken on credit. So Trees Limited will increase. It's a liability. So again we have to credit Trees Limited because Trees Limited is a liability. So obviously liability is always credited. So Trees Limited, how much? 1400. Why it is increasing? Because they are given machinery. Trees Limited has given machinery 1400. So Trees Limited will be credited with 1400 and the debit is machinery, the opposite side. Okay. So this is how you have to record. So bought a van by paying check 6010. So okay, so bought a van paying by check 6010. So van is an asset, it is increasing. So van is an asset, it is increasing. So van should be debited. Where is van? Here. Van is here. 6010. So say remember the way I am writing. Okay, so remember the way you have to write down. So this is what it is. Van account debit means van account should be debited means it should be written on the debit side. And how it is happening? So bank account, it's hitting bank account. So money is going out of bank. Bank is being credited. So bank account is credited with 606,010. So bank account is credited with 6,010. Why? Because money is going out of bank. So money is coming. Bank balance is reducing. Bank balance is reducing. When an asset, one asset is increasing, other asset is decreasing. One asset is increasing, other asset is decreasing. When an asset decreases, we have to credit it. Which asset is decreasing? Bank account. Bank is also an asset. So bank balance is decreasing. So that is why it is credited. See, when we write bank account credited, it means bank account is credited. Bank is coming down. Bank balance is coming down by 6010 and van is increasing by 6010 because van is an asset. So van is an asset. Asset always show debit balance. So always debited. So asset should be debited. So that is why we are debiting van account. So then sold some of the office furniture not suitable for the business for 150 on credit to D Twig and Sons. So what is happening? Furniture is also going out. Furniture is going out, but we are giving it to some other person on credit. So he will give us back someday. So he is a customer. So he will who will give us back the money on credit. So later on. So office furniture will be credited. Why? The office furniture is coming down. So we are selling the office furniture. So office furniture is coming down because when we sell, it should be credited. When the asset decreases, it should be credited. So office furniture should be credited and who should be debited? Duty concerns will be debited. Why? Because he is the receiver. He is the receiver of office furniture. So this is how it is. So office furniture by 150, it is coming down. Office furniture is coming down by 150. And who is taking it? How it is happening? Furniture is coming down. Furniture is a debit balance. So when the balance comes down, when furniture balance decreases, we have to write on the credit side. So why? Who is taking away? D Twig and Sons. D Twig and Sons is taking away. So but another asset is increasing, right? So we D Twig and Sons is a customer. So he has to pay us. So he is an asset. So it is increasing. So we have to debit D Twig and Sons. So 150. We have to debit D Twig and Sons furniture, office furniture, 150. Okay. So next. Paid the amount owing to Trees Limited 1400 by check. So what is happening here? We had to pay Trees Limited 1400. Now we are paying it out. So what is happening? One asset is decreasing. Which asset is decreasing? So when we pay by check, obviously bank balance will come down. And when we pay, so Trees Limited liabilities also will come down. So both one should be debited and one should be credited. So when a liability decreases, what we have to do? It should be either it should be debited, right? It should be debited. When liability decreases, it should be debited. When an asset decreases, it should be credited. So what is happening? 1400. So money is going out from bank. So 1400 money is going out. So asset is decreasing. So bank. So bank account again in bank account will not come. So here So 6010, maybe 6010. 6010 is because of machinery, right? Machinery or van. So here we have to write van. Okay. So remember bank account will not come. Van. So here again, what is happening? Paid the amount owing to Trees Limited by check. So by check, whom we are paying? Trees Limited. We are paying to Trees Limited. So here we have to write Trees Limited. How much? 1400. We have to write it. So remember in bank account, bank will never come. Never. If you write, it is wrong. Okay. So in bank will never come. So van. So how money we have paid? 6,010 to purchase van, and we have paid 1400 to Trees Limited bank account. So the asset is coming down. The bank balance is coming down by 1400. So here Trees Limited, we have to credit. We are bought on credit now. So we are paying off. So we are paying off 1400. So Trees Limited will be debited because the liability is coming down. When the liability comes down, liability should be credited. When the liability comes down, the liability should be credited. Against that, you have to write bank. Okay. Okay. Then next. What is the next entry? Received the amount due from T Twig and Sons 150 in cash. So you are receiving T Twig and Sons 150 in cash. So cash, what is happening? Cash balance is increasing. So it will be debited. So cash balance is increasing. From whom we are getting? From D Twig and Sons. So asset is increasing. So we write here D Twig and Sons. So D Twig and Sons, we are receiving the money. So D Twig, they don't have to pay anymore. Now they have paid. So the it will come down by 150. So D2 and Sons has come down by 150 because they have paid off, they have discharged the liability. So they have paid off cash. So you have to write here cash. So gone. D2 and Sons, no more amount is due. So cash we have received from D2 and Sons. So asset is increasing. Here liability asset is decreasing. So this asset is decreasing. Asset has changed hands. So customer accounts payable has become cash balance. So it has changed hands. So now next entry, bought Additional furniture, machinery. Bought more machinery by check 650. So what is happening? 650 more machinery, 650 by check. So cash balance is coming down. When we buy machinery, money will go out, right? So money will go out. So the bank balance is coming down. That's why we write here 650. And the asset, which one? Machinery will increase. The machinery will increase. So we have to debit the machinery. 650. The machinery will increase. So who has from whom we have bought by paying check 650. So this is how it is. So this is how you have to record. You have to prepare ledger. So now all these entries, see, write up the asset and capital to record the following transactions in the books of records of FRA. This is how you have to write down. So uh, this is what it is. Let us have a look at what we have done. So bank account. So money has come in, bank balance has come down. Furniture we have bought, we have sold. Machinery we have bought one. Again we have bought. Van we have bought. We sold to Dietrich and we received cash. We received cash from Dietrich. Capital. So it was introduced. 15,000 was received from the proprietor or owner or owner's equity. So tree limited. We sold on. So we bought on credit from tree limited and we discharged. We paid off the liability. So it has come down. So this is what we have to write down the ledger accounts. So this is how it is.